Welcome to the business. Is the tariff removal on Australian wine being celebrated by the Chinese?
No, not really. Look, it's what's happened is that the trade measures, quite unjustifiable trade measures, have been removed progressively over the period since the Albanese government has been in power in Australia. And really, it's just treated here in a very matter of the fact way. There has been publicity around the most recent removal of the wine tariff, but it hasn't been getting very much attention at all. It's just a matter of fact process that's worked its way through from this perspective in China, and people looking forward to the market being open. Certainly amongst the industry, there's quite a lot of excitement. People really are very keen to see Australian wine coming back into the China market.
Is it the case that the thawing of the relationship is more important to Australia's economy than China's?
Well, look, it cuts both ways. We are a very important supplier of all sorts of things into the Chinese economy. And to the extent that China restricts our trade, it means a smaller range of consumer choice and higher prices and costs within China. So trade is always a win-win, and I think we're seeing it again on this occasion.
Have Australian businesses learned an important lesson about doing business with China as a result of the extended pause? And how is their relationship likely to differ to what it was before?
Well, I think Australian business, by and large, has always been sort of pragmatic and straightforward in its dealing with China. There was a very big Australian business delegation in Boao for the Boao Forum on Asia last week. And look, certainly for our big resource companies, they are so experienced and so familiar with China and have trusted clients in China that it's very much business as usual. Sure, the big message that everyone takes from the events of the last couple of years is about over-dependence on the China market. The problem is, and I've written about this and talked about this on many occasions, there just happens to be this tremendous complementarity between the Australian economy, given its resource base, and the Chinese economy, and the massive size of the Chinese economy and its growth. And you can't wish that away. And no amount of government reports, no amount of government urging, funding trade delegations to smaller and more marginal markets is really going to make a substantial change. So it's really up to the individual businesses how much dependency they're prepared to tolerate, what their appetite is like for risk. They've been reminded about the risk in the China market, but it's really up to business to conduct its trade in its own way, according to its own interests.
You mentioned resources. The price of iron ore dropped to its lowest point in 10 months in recent days. What can you tell us about the ongoing demand in the construction sector there? And do you expect there'll be any surprises for producers?
Well, you could flip it around the other way, that the prices have been unusually high for an unusually long period of time. I served for 6 years on the board of Fortescue Metals Industry. During a period it was very difficult. We were building the Solomon Hub at the time. We had a lot of debt, and we were looking at iron prices in the sub $60 a tonne. So the last several years, I think, have been a windfall. Good on the iron ore companies for benefiting from it, and through them, the Australian community. But prices are probably returning to something like a more normal long-run trend.
Jeff Raby, thank you.
My pleasure. Thank you.